What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on GME stock. So let's start with the technical analysis. We are on daily time frame and I made my previous video right here at this point on February 26th, I guess, or February 25th. And my prediction was that you might enter your position and our first target will be at 255%. And we've hit this target with flying colors and then bounced back for more than 50%. And it was a huge bounce back from this point, and it is very technical. I will show you in a minute how I did my prediction, but first of all let's dive deep into fundamentals. On Forbes website we can see this article that GameStop, the second search anatomy of gamma swarm, and it was about gamma squeeze. And here is the basic idea of gamma squeeze. Gamma squeeze involves the use of options, specifically call options, that is, options to buy shares in the future at the defined price, called strike price, to drive up the price of the shares. It works because when a trader buys a call option, it creates a risk to the counterparty who sold that option. Without further measures, if the shares rise above the strike price, the option seller will have to acquire those shares in the option market at a loss to fulfill the contract. And to prove this article, I found this information. It was published on Street Insider and it was published on March 11th. It says analysts sees manipulation as someone bet $10.5 million yesterday that GameStop would close above $800 by tomorrow. Wall Street legend Art Cashin recently pointed out that traders are buying deep out of the money call options, then pointing out this price action to other, more naive traders. GLG research analyst Gordon Johnson pointed to a real-world example of this happening yesterday. And here is the example, here is the screenshot, I will show you in a couple of seconds. Johnson noted that yesterday someone bought more than 44,000 GME March 12 call strike options for $2.34 that have a delta of 0.046. This was a 10.5 million bet that GME stock would be over $800 in 2 days. That's correct, 2 days. The analyst said this shows that GME is potentially being illegally manipulated and it's not evil short sellers doing it. Johnson said this is creating distrust in US financial markets and it's important of media to point it out as it is important to our markets continuing to function normally and not becoming Zimbabwe. And here we can see an article that was published just several hours ago on Yahoo Finance, and it says we should see the GME short squeeze continue as 3 partners. And let me quote this. But according to Ihor Dusanivsky of analytics firm S3 Partners, the short squeeze will continue. We should see the GME short squeeze continuing and more short covering in the stock as mark-to-market losses mount, he told Yahoo Finance late Wednesday. But as the stock continues its rapid climb, there will be the short sellers waiting in the wings looking for the entry points if this rally loses steam and GME stock price retraces. And basically, as you can see, we have this massive rally from the end of February till the March the 10th. This is still very risky trade, and this is still closer to gambling than to trading, but nevertheless you can make a lot of money, and on the flip side of the coin you can lose all of your money. And that's why if you want to trade this type of stocks, and this stock especially, just follow 3 simple rules. First of all, do not put the money that you are not willing to lose. It is the most important rule if you want to trade this stock. Second one, do not go all in. You should always ladder your buys down in order to have a better average price for your stock. And the third one, do not put stop loss close to your entry price. And this is because the volatility. You have to stay in a trade rather than be kicked off out of this trade by the crazy price movements. And before we dive deep into analysis and how I did my predictions, please subscribe to my channel with notification bell. In this case, you won't miss my next video, and hit the like button if you like my videos. So let me switch to 4-hour time frame. And I made my previous video right here at February 25th or 26th, and I encourage you to enter your position at the opening hours right here. And as you can see, we hit even 10% lower price with this asset, and this will give you more attractive price to enter your position. And after that, we have this huge spike in price, and as you can see, we've hit exactly my target. And let me show you how I define this target. First of all, I pull the Fibonacci retracement tool from the top of this all-time high to the bottom of this wave. And as you can see, here is the most probable zone of trend reversal. It is 0.65 and 0.618. It is a golden pocket. You can always use this strategy, and you might miss some trades, but in majority of them you will have mind-blowing profits with the assets. It will make your portfolio even more profitable in the long run. The second tool that I use, it was Fibonacci extension tool, and as you can see, this was the bottom of this first wave, and I always warn you that not to enter your position at the top of the movement. You always have to wait the retracement. In worst case scenario, you might miss your trade if you will wait the retracement, but it is much better than to lose your money. And as you can see, I pulled the Fibonacci extension tool from the bottom of this wave to the top of this wave, and here is the bottom of the retracement. At the moment when I made my video, it was right here, and let me show you why I make my prediction to enter the position. Here is the Fibonacci retracement of this first wave, and let me clean a little bit the chart. I pull it from the bottom to the top, and as you can see right here, we hit exactly the same 0.618, 0.65 region, the most probable zone of trend reversal. And this information gives me an opportunity to encourage you to enter your position. And right here we poke through this level and then bounce back. It is a strong support, and from this point I started to suggest to accumulate your position. Let me switch this off and turn this on. So for now we have this data, and the ratio between first wave and the third wave usually is 1.618. So as you can see here, it is exactly 1.618 level right here, and it is our confluence zone with the golden pocket from the top to the bottom. And that's why this was my target, and we hit it with flying colors and then bounce back. And what should you do if you want to trade this asset again? Basically, let me show you this information. I take a Fibonacci retracement tool, pull it from the bottom to the top of this wave, and as you can see, we've hit again 0.65, 0.618 level, and then we bounce back for more than 40%. And it's quite risky to enter your trade right here, because let's compare the volume. On the mid of January we have this huge volume, and for now, even for this movement, we don't have even 1/3 of this volume. And that's why it is very risky to enter your further trades to the long side, because this asset might go down from this point. And basically, if you want to invest, you just ladder your buys down from this point and all the way, I think, to 100 level mark. It will be a support from this point, and just use fraction of your money. And I think we might go to 0.65 level again easily, and then we might have a bounce back, and then we might have all-time highs. But for now it's too early to predict something. We have to wait until the market reveals itself. And if you like my video, please subscribe to my channel with notification bell. In this case you won't miss my next one, and hit the like button. It helps me a lot. See you guys and girls next time. Bye.